Hello and welcome to Your Trades with me, Ankur Mishra and Kavita Thapalial. In next half an hour, we'll prepare you what you should do for tomorrow, but we'll also analyze what actually transpired in the last half an hour of trade today, Kavita. And that was something which actually acted like a spoil sport?
Absolutely. You know, the entire day we did manage to reach a high of 24,885 on the Nifty and 54,518 on Bank Nifty. But then the closing has been very flat for Nifty. We closed around 24,773. Beginning of the session, markets as well as the sector-specific action was in boom. But then, yeah, the closing for today's trade has been very flat. But then what's up for tomorrow? Let's bring in our guest today. We have Ajit Mishra, research Religare broking, to guide us with your tomorrow's trade. Ajit, hi, afternoon and welcome to the show. Last half an hour session, as Ankur mentioned, a spoil sport, but then market closed below 24,800. Now, how do you look at this closing and a very crucial level below which it closed?
Yeah, good afternoon, Kavita. Good afternoon, Ankur. So, yes, the initial first half, in fact, for the most part of the session, we were, doing well. In fact, banking have also started, showing some traction. But by the end of the day, again, IT was anyways on the back foot, and with decline in banking, the entire theme again changed. Means, as of now, Kavita, like what we discussed last week also, that until we see the alignment between these two key indices, banking and Nifty IT, I doubt that we can make any meaningful move over 25,000 mark, which is needed for the next leg of surge towards 25,250, 25,400. Meanwhile, 24,600, 400 definitely has become a strong base. But for any momentum, we need participation from banking and IT also. Other sectors, in the interim, one should be focusing for more of stock-specific approach. But when it comes to the index, the two key indices performance is critical.
Definitely, you mentioned about IT and banking, but what about FMCG? Do you think there is still meat in some of the FMCG counters where one can invest as based on the charts?
Certainly, means FMCG, yes, we had a couple of days of strong up move followed by now marginal dip. But if you see that stock like Marico, which is still holding strong around the record highs, is something that one can continue to look to accumulate on every dip. Then we have Britannia also, that falls into that category, means almost retested its record high and then a marginal decline. There could be a bit of a profit taking or consolidation in the interim. From all these sectors, it's not only restricted to FMCG, which is sitting on the sidelines as of now. In fact, auto, which is outperforming the market big time, there could be a possibility that we might see some consolidation in days to come. But largely, if you exclude these two, banking and IT, rest of the sector, I believe that this continuation of rotational buying will continue. So you should definitely focusing more on buying on tips candidates among all these sectors.
What are going to be your picks and recommendations, Ajit?
Yeah, so my first recommendation is, of course, from the auto basket, considering the momentum that we are seeing. So Ashok Leyland, we have seen a fresh breakout with strong volumes. The stock is already at the record highs. So we expect this momentum to further continue, and 148 is what we are eyeing in the near future. So with stop at 132, one can accumulate Ashok Leyland at current levels. Then we have Glenmark from the pharma basket, wherein we have seen strong recovery. The stock has reclaimed short-term averages, now forming a base for the next leg of the up move. So here also we are seeing this momentum continuing till 2170 mark. So with stop at 1990, one can buy Glenmark also.
All right, Ajit, thank you so much for joining with your valuable suggestions. But with this, it's time for a daily segment of Chart Check, where Srishti is ready and will give you which are the breakout or breakdown stocks. Srishti, all those details, and it's time for a wrap in this edition of Your Trade. So thanks for tuning in.